everybody, and welcome back. We are here today to discuss tax season. So I just want to get a handle on my things, and then we can begin. Okay, so tax season 2026 is here. And this year, SARS is doing more of the work for you. But that is exactly where people get caught out, right? Because if you just trust that your auto assessment is fine and you click accept, then you could be leaving money on the table, or even worse, you could be signing off on a return that is wrong. So in the next few minutes, I'm going to give you the key tax season filing dates, what is new this year, who actually needs to file, and how to avoid penalties and refund delays. So let's get you sorted out. My name is Humaira from HM Accounting, and this is where I make South African tax and money stuff make sense. So there's no jargon, no panic. If tax season stresses you out every year, subscribe and do stick around because this video is your roadmap. Right, so let's get into the dates. Now, these are the dates that you absolutely cannot miss. Let's lock in the 4 dates that do matter. From the 1st to the 12th of July, which is next month, at the time that I am recording. Well, yes, we have half a month left. So from 1 July to 12 July, SARS is going to send out auto assessments. And if your tax affairs are simple, so for example, if you just receive an IRP5, then SARS does this calculation for you and lets you know during this window, right? They've got to let you know that they've done the auto assessment. From the 13th of July onwards is when filing season officially opens up for everyone who needs to submit a tax return. And then from the 23rd of October, so if you are a normal salaried taxpayer, when SARS calls non-provisional, your deadline to file is the 23rd of October. So that is the latest that you can file if you are a non-provisional taxpayer. Non-provisional meaning that you do not submit provisional taxes, right? And then we have the 22nd of January 2027. So this is if you are a provisional taxpayer, so meaning you pay provisional tax. This could be people like freelancers, like business owners, people with significant income outside a salary. So they receive rental income, maybe a lot of interest, or maybe they receive monies from a trust. And also if they're a director of a company, then you do get until the 22nd of January 2027. Now, this whole season covers the tax year from the 1st of March 2025 to the 28th of February 2026. So do take a screenshot of this section. Seriously, take a screenshot, keep it for yourself. It is important. And I think it was also important to note that it's covering the period of 1st March 2025 to February 2026 because a lot of people do get confused with that. Okay, so now let's talk about auto assessments. Auto assessments, I know they feel like a gift to you. SARS does the maths and a lot of people just accept it and then they move on. But the problem is that SARS only knows what it's being told. So it works off the information it already has, which are things like your IRP5 from your employer, your medical aid tax certificates, your retirement annuity certificates. But it does not automatically know about like extra deductions that you could be able to claim. So these are things like income from a side hustle or from a rental property, anything that didn't make it onto a certificate that SARS receives, right? So if you accept a wrong auto assessment, 2 things can happen. You would either miss out on a refund that you were owed. So for example, if you accepted the auto assessment, but you had Section 18A donations that you could claim, you would now miss out on that. Or you could underdeclare your income and end up owing SARS later. So this is when you are not reflecting your rental income, when you are not reflecting your trust income. So this SARS would pick it up later and you would end up owing them later. And obviously that is going to have interest with it. So the fix to all of this is to treat the auto assessment as a starting point and not the final word. Review those figures of yours. If something is missing or it is wrong, file an updated return instead, and you've got until your normal deadline, the 23rd of October, to do so. So let's look at what is new for 2026 filing, right? Because SARS has made a few changes this year, and most of them are genuinely in your favor. The first thing is there's more pre-filled information. So more of your return already comes filled in, which means that there's less typing, that there's less errors, but warning, as before, check what is pre-filled. Convenient does not always mean complete. The second thing is that they have improved e-filing. So the online system has been upgraded to be even smoother and easier to navigate. So the actual submission process should be less of a headache. And the third thing is that SARS has now expanded WhatsApp services. So SARS is doing more through WhatsApp. So certain queries and requests don't require you to sit at a branch queue anymore. Now, the theme this year with SARS is very clear. SARS is going more digital and more automated, and that is faster, but it also puts more responsibility on you to check that that automation got it right. Now let's talk about whether you even need to file, right? Because quick one that saves a lot of stress, not everybody has to submit a return. So generally, if you earn under the SARS threshold from a single employer, your PAYE is already deducted through your salary and you have no other income or extra deductions to claim, you may not need to file at all, okay? But this is important. The moment that you have another income or rental income or more than one source of income or deductions you want to claim, that changes. And if SARS did send you an auto assessment, then you're still responsible for making sure that that auto assessment is correct. And if you're not sure which camp you're in, that's exactly the kind of thing to check before the deadline and definitely not after. Right, so do look at the SARS current threshold figures to make sure that you are below that threshold, and that will tell you whether you can or you cannot file. I think it is about 90 something thousand at the moment. I can't remember the exact figure, although I should, but it is 90 something thousand, right? Now, avoiding penalties and refund delays. This is where the money is. So let's keep SARS happy and let's get your refund fast. Now, penalties are a very real thing. If you are required to file and you miss the deadline, SARS does charge a monthly admin penalty for every month that your return is outstanding, and it keeps stacking up until you file that return. It is not going anywhere. So the single best move, if you are ever late, is to file it anyway, because the sooner that you file it, the sooner that it stops those penalties from growing, right? The second thing is when it comes to refund delays. Now, if SARS owes you money, here's how to actually get it and get it quickly. The first thing is to make sure that your banking details on e-filing are correct and that they are verified. Recently, SARS has been really looking into banking details and wanting banking details updated. So this is a really important thing to make sure that you attend to, that your banking details are valid, that they are updated, and that SARS has the correct details on hand. Wrong details is the number one reason that refunds get stuck. The second thing is that to make sure that you have no outstanding returns from previous years. And the third thing is definitely to clear any SARS debt that you already owe, and they will refund your they will offset your refund against that debt, right? So let's go through a little bit of a prep checklist. Gather all of your tax certificates like your IRP5s, your medical aid, retirement annuities, donation certificates, any other deductions you may need. I've actually got a freebie that is available on my website. I will put that link in the description box below, hopefully, where you can go and you can get the tax information of exactly what things may be applicable to you. So it's a checklist, and you can see what may be applicable to you. It's a full list of documents, right? And then the second thing is, once you've gathered all your documents, do verify your personal and your banking details on e-filing. And then the third thing, review that everything has been pre-filled, or review everything that's already been pre-filled and submit accurately and well before the deadline. If there's any verifications that you need to do or audits that you need to do, get that done as soon as possible as well. So let's just do a little recap to finish off. 1st to 12th July, that's when we have the auto assessments. The 13th of July, that is when the filing season starts. 23rd of October is the deadline for salary taxpayers, those not paying provisional tax. On the 22nd of January is your provisional taxpayers and your trusts deadline, right? And then do not blindly accept your auto assessments. Do check it and get your banking details right to get that refund fast. So if you're reviewing your auto assessments, following up on all of your deductions, or just the thought of dealing with SARS makes you want to lie down, that is literally what we do at HM Accounting. There will be our email address, which will be in the description box, where you can reach out to help us to assist you with your individual tax returns or even your business tax returns and financials. And we will make sure that your returns are accurate and that you get back every rand you're owed if you are owed monies, but we will make sure that you end up in SARS good books, right? Do not leave it until October. Do hit subscribe, get it sorted early, and I'm going to see you in the next video. Thank you for watching.